Mario Draghi knew exactly what he wanted to say about the bond purchases by the European Central Bank he heads. Unfortunately, journalists kept asking the wrong question, so he just asked himself the one he wanted. In reply to himself, he insisted that no, he could exclude completely the idea that the region's central banks were providing monetary financing to government. It was such an important point, he made it twice, using the same words. The problem is, the ECB's policy does look like monetary financing, printing money to fund government spending. When the Eurozone was falling apart, sky-high interest rates forced governments to bow to the wishes of Germany and accept a series of limits on their spending, most importantly, a special balanced budget treaty. Now that rates are low again, thanks mainly to the ECB's bond buying, governments are finding ways to escape the shackles of austerity. More military spending and the extra costs of immigration in the region have added to a fiscal loosening which was already underway in Italy, France and Spain. That's created what Goldman Sachs estimates will be extra government spending of 0.3% of the region's economy next year. Now, this is every German's nightmare. Ease the pressure on soft southern governments and they'll go out and splurge the money that they can now get in order to boost their standing in the polls. Now, for the ordinary Keynesian economist, it would hardly be a shock that governments should borrow and spend more when faced with what the Eurozone has, massive unemployment and still pretty slow growth, in spite of the improvement. But even with all the fuming in the German press, the danger isn't that the purse strings are loosened a little, but that governments get so used to it that it becomes politically impossible to tighten them up again if and when inflation eventually arrives in Europe. Now, Japan's the major country which has gone the furthest in reducing the independence of its central bank. It does indeed look as though the government is responding to bond buying by the Bank of Japan. This chart shows how as the BOJ has been extending the maturity of the bonds that it buys, so it's buying much longer dated bonds, so the government has extended the maturity of the bonds it issues. The blue line shows the average maturity of bonds on the Bank of Japan balance sheet, and the red line shows the average maturity of bonds on the Bank of Japan balance sheet, and the blue line shows the average maturity of the issuance by the government. You can see when Abenomics started and massive extra money printing came along, the government started issuing much longer dated bonds. It really shouldn't be a surprise that governments respond to lower interest rates by borrowing more, or in this case by borrowing on better terms. After all, central banks have lowered rates in part because they want to encourage households and companies to borrow more. Governments naturally want to get into the act as well. Now, worries about the long-term effect of easing up the reform pressure on peripheral Eurozone governments has entrenched the German-led opposition to quantitative easing within the ECB. Today, we should say, Mr. Draghi failed to secure unanimous agreement for the cut to interest rates and the extension of the ECB's bond buying programme. The small size of the rate cut and the lack of extra bond buying surprised investors who had been betting on far more. And those heavily crowded bets on a stronger dollar went into dramatic reverse. You can see here how the euro leapt initially by 3% before coming back a bit. Bond yields also rose sharply and European share prices tumbled. In the short run, a lot now will depend on whether ECB policymakers suggest that having done less than expected means that there's still scope to do more in future, or alternatively, whether it means that internal opposition to action is stronger than investors had thought. Bond yields may have risen, but they're still very, very low. The more that governments take advantage of that to borrow and spend, then in the long run, the more the hawks at the ECB are likely to worry about taking any further action, no matter how many times Mr. Draghi denies that monetary financing is underway.